Well, I think the Swift model. We can talk about open APIs. We can talk about open networks, but it isn't. I mean, Swift is it's a Swift-controlled API, and even I'm complimentary of what GPI has represented in terms of accelerating what has been a relatively slow process. GPI, I think, is a big step forward, but it's still there's a central database where you're querying a transaction status, and so that's a central operator. I think Gottfried said, and I'd agree with, decentralized systems, I think over time, as we've seen with things like TCP/IP, are likely to win. And I think that today is not what Swift is. And when we think about how to enable a transaction from a Barclays account to an M-Pesa wallet, mobile wallet, that when we think about an internet of value, it's not just about the banks, for sure. Yes, it's about regulated institutions, and we're certainly not trying to circumvent those things. But I think it's fundamentally kind of a different view of how the world may play out.
Yeah, maybe to that, I mean, a big part of the value proposition of Ripple, I think, is the cryptocurrency, the XRP. I think that's another one worthy of debate. There we do find that the banks are also, at least when they talk to us, they may tell you different things, they are hesitant to convert things into a currency, a cryptocurrency right now, because of the volatility in the currencies, because of the fact that you don't have the deep liquidity that you have in, for example, the dollar as a clearing unit at the end of the day. So again, when we engage banks, we don't find them ready for a model where you convert it into crypto and then convert it back, and that has to do with many things: regulation, volatility, and all the things that are being debated around crypto. But that's a whole separate debate.
It's not really a separate debate, because I think there's two important things about this, and Gottfried mentioned this earlier. Swift today is a one-way messaging framework. It actually isn't a liquidity provider, right? It's Swift messaging partnered with bank liquidity. When we think about an internet of value, it's a mixture of two-way messaging frameworks, moving to real-time, a chatty protocol, if you will, coupled with real-time liquidity. And I hear people talk about volatility, and I feel like they're propagating misinformation. The volatility risk of fiat, volatility is just a mathematical calculation of time times volatility. If you hold fiat for, let's say, an average Swift transaction today is in the order of magnitude 2 days, that's about 180,000 seconds. An XRP transaction is 3 seconds. So if you take a low volatile asset times a long duration, fiat, or a high volatility asset versus a very, very short amount of time, it turns out mathematically there's less volatility risk in an XRP transaction than there is in a fiat transaction. The difference is you have market makers. When you do a Swift transaction, there's banks saying, there's a market maker saying, I'll lock in that rate. I'll take the volatility risk for the next 2 or 3 days. With XRP, you don't have to do that because it settles so quickly.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.